Hello everyone, it's Wednesday, April 1, and today we will review the charts for the euro and the pound to identify potential market trajectories. Yesterday, the euro gained significant ground against the US dollar. Risky assets, including stocks and cryptocurrencies, saw increased demand following another statement from US President Donald Trump suggesting that the US plans to end the military operation against Iran within 2 to 3 weeks, claiming that the country had achieved its goals. He stated that the operation would conclude regardless of whether a deal with Tehran is signed or not. Markets reacted positively to these news. However, it is worth noting that similar statements have been made previously and the situation has not improved. In fact, the active deployment of US ground troops in the Middle East indicates an escalation of the conflict rather than its resolution. Trump's comments appeared to be misleading the market. Iran's president also delivered a speech yesterday, expressing a willingness to end the conflict but requesting guarantees, which has led to modest declines in the market. However, uncertainty still looms as data suggests the conflict is unlikely to be resolved in the coming weeks. Notably, starting April 1, Iran threatened to target major companies operating in the Middle East, including Google, Apple, and others. Therefore, all we can do is monitor the developments in the conflict. Regarding the British pound, it dipped sharply following a statement from British Prime Minister Keir Starmer. Many expected him to announce a significant new support package, but he only mentioned that starting April 1, 2026, the UK government would introduce several cost of living support measures aimed at easing financial pressures on households. These measures include an increase in the national minimum wage, a freeze on prescription charges, and a reduction in energy bills. Given that greater support was anticipated, the British pound reacted negatively, although the decline was later offset by Trump's comments. Now, let's take a look at today's macroeconomic calendar. It features manufacturing PMI figures for March from Italy, the euro area, and the UK. Downwardly revised readings could put pressure on the euro and the British pound, although estimates suggest that the data will remain relatively stable. Additionally, the Eurozone unemployment rate for February is on the agenda today, with expectation that it will remain unchanged at 6.1% in the United States. Statistics include the ADP National Employment Report, which suggests that non-farm payrolls likely increased by 41,000 jobs in March, following a rise of 63,000 in the previous month. US retail sales are estimated to have risen by 0.5% in February, while the ISM manufacturing PMI is projected to show positive results. Strong data could revive demand for the dollar, which would likely wane on the euro and pound sterling. Furthermore, Fed officials Alberto Musalem and Mitchell Barr are scheduled to speak today. Many policymakers expressed yesterday that inflation may remain elevated at 3% for an extended period, highlighting the need for action. However, there are still mixed signals from the Fed, so the market may well react to today's comments from the regulator's representatives. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 1.1588 would trigger a sell signal, particularly in response to weak data from the euro area, bringing the euro down to 15.51. A break below this level could push the pair down to 15.16 and open the path to 14.84. At this level, I would recommend considering long positions on rebound, expecting an intraday correction of 25-30 pips. However, it is important to note that this manipulate market move could quickly be offset by escalating tensions in the Middle East, so caution is advised when seeking buy opportunities. Long positions at 15.16 and 15.51 would be relevant following a false breakout. the target of bulls would be 1588. If selling activity is subdued, a break in consolidation above these levels could give the euro upside momentum, potentially rising to 1628 and possibly reaching 1667. At this level, I would recommend be wise to consider short positions on rebound, targeting a 25-30 pip move. Sell entries at 1628 at 1588 should only be considered after false breakout. Regarding the British pound, the primary focus will likely be on the level of 1.3262. Weak UK data could trigger a false breakout, causing sterling to slide to 32.20. A break below this level would push the pound down to 31.91 with the potential to reach 1.3162. At this mark, traders are advised to consider long positions on a rebound, targeting a move of 25-30 pips. Buy entries at 1.3220 and 1.3191 should be placed following a false breakout. In a bullish scenario, if the price breaks through and consolidates above 32.62, the British pound could rise to 32.93 and potentially extend gains to 1.3328. At this level, I would recommend considering short positions on a rebound, anticipating an intraday correction of 25-30 pips. Sell entries at 32.62 and 32.93 should only be considered after a confirmed false breakout. Best of luck to everyone.